What's up, guys? Welcome back to the channel. So today we'll talk about how inflation could impact your student loans. You guys already know that the Fed has been increasing rates to curb inflation, but let's talk about how all of these could really have an impact on your own student loans. So let's get right into it. Okay, so you guys know the Federal Reserve has been increasing rates to sort of like curb inflation. And yeah, so we just want to chat about how that could impact you, whether you already have a loan, you already have student loans, or you are planning to get student loans. So let's talk about that. But first this is focused more on like private loans and not like federal loans. So I'm not talking about like citizens that sort of got federal loans or like permanent residents that got federal loan. That's not what I'm talking about. I'm talking about like the regular private student loans. So, and I feel like that distinction is very important. So yeah, just wanted to say that quickly. I have my phone, guys. That's why I'm always like looking down. But let's get into it. The point is, usually when you get your private loans, there is a fixed portion of your interest rate and there's a variable portion of your interest rates. See, at this point, I have talked too much about interest rates on this channel. So if you don't understand all of that, I have a video hanging around somewhere on this channel that explains that, and I'll also put some in the description box. But point is, there's a fixed portion of your interest rates, there's a variable portion of your interest rates, right? So the whole increase and like the Fed increasing rates and all of that would likely impact your variable interest rates. So for some loan providers, when you're taking your loans, they say this would be 5% plus 0.5% of, say, Fed rate. That's usually how they quote it. Sometimes it doesn't have to be Fed in the US. It could be LIBOR, it could be any, rates, basically. It is that variable portion that will be impacted the most. Usually the fixed part is fine because like they already tell you this will be fixed 5% plus variable, right? And it's that variable part that would be impacted by the whole like inflation interest rate thing. If you don't even understand anything, financial or investment or things like that, interest rates, don't worry about it, but you should if you're taking loans. But anyway, don't worry too much about it. Just know that the rate increase would impact the variable portion of your interest rate. And what that means is you would still, now your interest will be like say 5% plus 0.5% of a higher Fed rate. And that's how your interest rate would increase significantly, depending on what the Fed rate, how much increase has happened, which has been a lot recently. So this will impact you if you've already signed your, this will impact you if you've already signed your loan to the extent that there's a variable portion. Now, if you took a loan that was fully fixed, where they just said you will pay 5% or you will pay 10%, I don't think you have so much to worry about. But this would impact you if you already took out loans and there was a variable portion. Then that's kind of where there's an issue and your rate will be higher. But if you've not, if you haven't signed your loan, now if you don't already have like student loans and you're still in that process or you're close to like closing out the process, chances are that you will pay higher interest rates just because of the climate, just because the Fed has been increasing rates, because of the inflation and everything. You will pay more, like you would have a higher interest rate basically. So something you can do, or you should absolutely do, is as you're thinking about taking loans, don't just apply to one loan provider. Try to apply to multiple and kind of see what they can offer you in terms of rates, because like just 1% or even less than 1% rate interest rate difference can really impact your student loans and how much you pay. So just have that in mind as you think about like applying to loans and stuff like that. But chances are that you are getting the highest of the highest of the highest rate compared to people that had sort of signed their loan agreements and they already have student loans. So that's just one thing to pay attention to. yeah, I think that's it. You just want to pay attention to like what interest rates you're being offered. This is the time to really read your loan agreement and see what interest rates you're being offered and if there are any bonuses or discounts if you do certain things. I've talked about that on this channel, but some loan providers basically say if you set up recurring payments, would reduce another 0.25% from your interest rate or from your payments every month. Just pay attention to those discounts because they could really help now that rates are like pretty high. So guys, I hope you guys found today's video helpful. Quick video, but let me know if it was helpful, if you learned anything, and if you have questions, just put it in the comment section. I hope you found it useful. If you did, don't forget to give it a thumbs up, okay? I need your thumbs up on this channel. And also don't forget to subscribe. And if you have friends going through the whole admission process and need to know some of these, please share with them. And yeah, I'll see you in my next video. Bye.